Hello, YouTube. Did Powell just declare victory on inflation and what exactly that could mean for stocks? Because it looks like Santa Claus has come to town. And if that's going to continue, there is substantial gains ahead. In 1982, Paul Volcker declared victory on inflation. And if Jerome Powell declared eviction right now, right, giving us that thumbs up saying, yep, I blinked, that's it, we won, we're going to go higher. Well, that would mean that we could be going dramatically higher from here. So, at a very high level, what it means is that if Santa Claus is going to come to town, we've already been looking for a very specific pattern here. I've been talking about how it could be November of 2020. We talked about the bear trap. It happened. If the rest of this pattern is going to play out, which now it's like tracking pretty closely, we note that we do have the higher low that was set. Now we have the close over the candle high. That happened in October, and we're currently over that candle high. So if this pattern is going to continue, it means that we're only about right here, which means there's like a lot more upside ahead from here. And if we look really closely, it's like only up. The hollow candles just mean that we're closing higher than we open. Going to a candlestick, we just see there's a lot of green, and that a lot of green would align with the pattern I'm looking for, where man, now strategists are calling for 500. Man, I think we could go to 560 if we're going to go. And the bull case is now back in town. This is what could be happening. So this weekend, we really want to make sure we're prepared for what could happen from here. And throughout the week and throughout this video, I'm going to bring a lot more of this to you. So hopefully you can stay tuned. And I really think this is what we got from Jerome here. I'm going to look at one more thing because I think this might be important for us to look at for context. And that's the heat map here. So if we look to the heat map, it's pretty green everywhere. There are some pockets of red like Eli Lilly, Oracle, Adobe, United Health, but for the most part, it's pretty green. So what does that mean? Hey guys, time to go up, hold my beer, right? It's going to make the market go up. And the seasonality chart could come into play here. But I want to look at this note here from iCapital's Anastasia Amoroso first. It tells us that it's all about decelerating inflation. Could sense exuberance in Fed statement. Rate cuts very much on the table on the upcoming meetings. Huge positive developments for the markets. Oh my goodness. Did Jerome Powell just say, hold my beer? That would be like really bullish for stocks. I'm going to ask you for a huge favor. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly appreciate that. Thank you ahead of time. All right. So if Jerome Powell did say it's time to go, I've pretty much told you we could be plus 45% higher from here. So now we want to look at a little bit more evidence as we dig a little bit deeper into this period right here. If everything's tracking, then we should be about right here. We get a little bit of a dip, a little bit of a rally, but really forming higher highs and higher lows as we continue to grind higher. Well, that's kind of what we're looking at for here. We pop and then we start a new year, right? So pop, higher lows. We get a couple of choppy months here, and that could roughly align with here as well, where it starts to get a little bit choppy, right? There's the first low, there's the lower low, roughly a double bottom. Progress is not really being made. We're really going sideways. Hey, that makes a lot of sense to me. So that first part makes sense. This part about Jerome here, right? You're like, man, this guy is Santa Claus. Well, in 2018, he was the Grinch. This year, he wants to be Santa Claus. So huge positive development for the markets. That's the big deal. And I currently think we're currently in a Goldilocks period where I think we could be quite bullish until we get the first cut from the Fed. So I'm telling you here that I have a template or a roadmap for what could happen. I'm not saying this is a guarantee, but I predicted this part right here. I was wrong. Ended up taking 3 months, not 2. So on the third month, I thought we were already going to be going up. We weren't. We didn't hold the higher low either. We had a lower low form. But ever since we had the reversal and close over the candle high, hey, we just picked up where we were before. New 52-week high, new 52-week high. Little bit of consolidation here into the next candle. That would be January. And what does January normally do? Well, January, we normally do a whole bunch of nothing. We go a little bit down more. That would what? That would almost perfectly align with this period right here, right? Low. Maybe we don't hold a higher low. That would be February if we dip. But to make it really simple, it just means that as of right now, we're tracking. We're currently here. We have a lot more data or a lot more time we have to go through to really confirm the move. But like everyone's getting bullish. So what does that mean? Hey, until the pattern breaks, let's keep playing bull. But the second the pattern breaks, if everyone's looking one way, we could easily go in the other direction. So that's what I want to lay out for right now. It's the template that, hey, everyone's kind of looking like super bullish, right? 5,100, 5,600. How high could we go? I've given you a catalyst of price. Now I want to give you a catalyst of time. So when we think about Jerome, what we want to think about is the first. So we got the pause. That's where we go sideways, like in 2000, 2006, 2018, and currently here in 2023. But after they cut, recession usually comes shortly after. The gray part means recession. So the wider it is, like in 2008, that just means it's a deeper recession. 2020 was like 2 quarters, really, really shallow. So anyways, they cut. So they pause, they cut, recession comes. 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 Why would this time be different? I don't know. The only reason why I think it would be different is because this current Fed hiking cycle is more inflationary. It's not a business cycle. The business cycle means that it's just a boom and bust of companies, right, expanding, contracting. But in this period over here, going back to like the first part of the chart, we get higher highs and higher lows. So if this is a regime where we're going to form a higher high, and ultimately when the Fed cuts rates, they're saying we're going to hold that higher for longer, even if we do cut, that would kind of look like this: high, higher low, higher high, higher low. We just keep grinding higher. So what I'm not sure, again, there's a few things I'm sure about. There's a few things I'm not sure about. I was not around or trading stocks before 1988. It wasn't even alive. So I don't know what happened during these periods. I kind of understand what happened in 2008, but to be honest, I graduated high school in 2006. So it's not like I was financially literate. All I'm really aware of for a Fed hiking and cutting cycle and then hiking again is 2018 and now. And what this means is, for me, all I'm looking for is the period where we're going sideways. So we can go sideways for like 6 months up to like just over a year. So I'm thinking about, all right, so if the pause happens, then they cut, then recession, that's pretty easy. It's a 1, 2, 3. For number one, let me actually do this right here. I'm going to type it up. So we're going to go number one. That's the pause, right? Number two is going to be the pivot, and then number three is going to be the recession. So if we just think about this simple recipe, we're going to have to give this a lot of time. This is like a 2024 template. If we keep forming higher highs and higher lows, it's already my base case. So I understand what bulls are looking for. I also understand that at any given moment, there could be some kind of financial accident. I'm very aware of that. We'll get technical feedback, or the chart will break down. And notably, what I'm looking for is the same thing we've been looking for in the weekly chart. It's just higher lows. So if bulls are currently in a 52-week high, they've already made progress. We're within about 2% of the all-time high. And now, if we just keep doing what we did over here, which is the same period we're looking at, by the way, we're looking at this part, we're looking at this part. So if we just keep tracking, we got low, higher 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 low, until we don't get higher lows anymore. We get a lower low, close below the low. That's where we start going sideways. Then we go down, right? Up, sideways, down, up. At some point, we're going to go sideways. Then we're probably going to go back down. The question is, do we get higher, then go sideways, then come back down, where what used to be resistance turns into support? I'm not sure. We got to wait. And each candle is 1 month. It's going to take a long time for this pattern to play out. But this is how I could see this happen. So if we think about when we paused, that's in, right, we got 5.3 in August. So that would take plus 6 months. Well, plus 6 months takes us into like February of next year, I believe. So, right, we got August, September, October, November, December, January, February. Yeah, into February. 12 months would get us to August of next year. So sometime between the spring and the summer, if we start getting the cut, which everyone now expects, right? Everyone's like, oh my God, March. And then when, what's his name? John Williams says from the New York Fed, hey, maybe you shouldn't be pricing in a March cut. Everyone's like, well, is that bullish or is that bearish? We're not going to look at short time frames today. I encourage you to subscribe to the channel if you want to see updates on daily charts. I'm mostly focusing on higher ones here, but we know we did get that fail breakdown on Friday I was looking for, but we also got the dividends. When we adjust for it, it just really looks like an inside. Is it an inside bar? Yep, it's a inside bar. So that's quite notable, but we're focusing on the weekly time frame for right now. So again, please consider subscribing if you want to see all the videos. So if you think about, all right, you've talked about how there is a template for us to go a lot higher. We've talked about how we're going to pause, pivot, then recession. So we want to be out either when we see technical feedback that we're printing a monthly lower low, which means we're actually losing the previous monthly low. As of right now, we could go down as far as 418, right? Why? Well, because that's last month's low. If we came all the way back down into the end of the month, that would be a higher low. I don't think that's going to happen. So now we're going to watch for January, which should look similar to here, right? Slam down for a little bit of a higher low, slam back down for a little bit of a higher low, which is roughly 460, which is our previous top. If it acts as support, if what used to be resistance acts as support, we can probably leg up to at least test our all-time high. A little bit of indigestion here, and then boom, that could take us higher. Why does this matter? Because we see charts like XLK already in new all-time highs. Because we see charts like SMH already in new all-time highs. And now most recently, we're seeing stocks like the Dow now actually going into new all-time highs. Which one's following? Well, I'm watching for QQQ. We're within like a dollar or two, and we got a record weekly close. So we're so close here. I think it's within, so 406.50. Here we got 408. It's within just over $2. So the question here is whether or not we're actually going to break on QQQ, which would mean that broader NASDAQ participation is actually driving the market up. So I've told you that we're looking for a template. I told you we're looking for a Fed cycle. Now I'm also going to tell you that between now and call it August, if we keep seeing those monthly higher lows and we keep seeing nothing really breaking in the system, meaning no financial accident like a banking crisis we got earlier, hey, I'm a little bit torn. I like when lines go up. I like when my account grows. I just also know we usually take the staircase up and then we take the elevator down. So it's not that I don't want to get bullish during the part we're going higher. I'm just very aware that people don't usually know how to manage the risk. So they ultimately lose because we go lower than where they entered. That's what I'm trying to be mindful of here. So trying to be optimistic. It's a Santa rally. Let's make sure we pay attention to the templates. Something else that's really important for me is just that I want to see us get into over 70 on a sustained basis. So I'd like to see us form higher lows and higher highs on the timeline here. So we got pop, flag. We're really just grinding. They are still higher lows, but like they're very marginal now. I'd like for us to get to over 70 and hold it. That would get me a little bit more confident. In terms of what could drive the market this week, I'll show you the chart that I'm paying most attention to in this week in a minute here. But I'm really paying attention to core PCE coming in on Friday. We actually have the numbers now. When I refreshed it earlier, they weren't there. We're going to be getting down to 3.4, and then core PCE is going to be at 0.2. I think these numbers would be well received. We have other economic data like CPI out of Europe. We've got consumer confidence, GDP revision, and we also have initial jobless claims. But I think it's really about this number because that is the Fed's preferred inflation gauge. So if the market is still data dependent, whatever this data is on Friday, the market will tell us whether or not good news is good, if bad news is good, or if bad news is bad. So that's what I'll be watching for. All right. So now the chart that I am paying most attention to, we're looking at high time frame charts. We're now going to just look here at SPY. And this is going to be very simple. I've updated the lines already. 473 is resistance. I'll tell you where that comes from. Resistance comes from all the way over here. So all the way over here means the previous weekly tops, we're getting so close to the all-time high that if we can clear roughly 475, 480 is the next top. That's the all-time high. We print 480, boom, new all-time high. So if we're going to continue the pattern that we saw on the monthly, again, the pattern here, make it so simple, you can't ignore it. Higher lows, right? All higher lows, all in here. We got higher lows forming so far. And you're like, man, I don't think it can continue. It's only been 2 candles. People said the same thing on the weekly chart. And now we've got like 7 in a row. 1, 2, 3, 4, 5, 6, 7. So we have 7 in a row here. And the really important part is that every week we've actually closed over the candle high. I'll go to candlesticks here so it's a little bit easier for you to look at. Here we go. So what we're looking for is that the close is going to be over the candle high, which has happened every single week of this expansion. This is called performance chasing into the end of the year. Everyone needs to beat the market, and the market's going up, so they better make sure they buy. So if we're going to continue that pattern for this next week, it means we should be over this week's high. We should open up the candle and close over it, which would signify that we're going to be closing over that key resistance area I'm talking about. I'll tell you what I think is actually more likely going to happen this week. So what I think is more likely going to happen this week is what happened to Bitcoin. And this is where we're going to pop over to our Bitcoin chart here, where we had the 8 weeks in a row. Then we have an upper wick, which is the same thing we're seeing on S&P. And then we get a slam to form an inside bar. That slam happened here on a 1-day power slam, which was on December 11th. And that's how we actually came right down to that support. The support did hold. And this is what I would actually really like to see from the bulls. Why? I want to see what happens when we slam down to what should be support. It should get bought up hard, which is exactly what we saw here on Bitcoin. So if that same thing happens, let's now go back to SPY. That's exactly what should happen here. 460 is a really important number. It's our previous resistance. It's our previous 52-week high. If we can slam down to 460 and hold it, man, that's going to be really bullish into the end of the year. How bullish? Potentially like it's 1982. So with that said, please consider subscribing to the channel. I will be streaming live at 9:15 a.m. on Monday. Otherwise, you can watch my weekend deep dive from last week over here about how I talked about how it was a bear trap. If not, please consider subscribing, and I look forward to seeing you on the next video. Thank you so much.